So the two sectors I like right now. So XLC, it's an interesting sector of the S&P 500 in that you've got Facebook and Google as about 35% of the ETF, and then the rest of it, you end up with Verizon, AT&T, and some of your old line communication players that pay massive yields. As rates go low, those old line, AT&T, Verizon are going to look good, and then Facebook's not going anywhere. There's a lot of headline risk around it. It's my thought if the regulator comes in and goes after Facebook, the person writing that regulation will be Facebook through their lobbyists. Google, same thing. These companies aren't going anywhere. Online advertising, Google has 90% of search. I don't, if the government goes in to break up Google, I think that'll be a net positive for shareholders. Because I think you'll unleash a lot of shareholder value there. However, I like that sector. I like its correlation to the rest of the S&P 500, and then tech. Investors are going to pay a premium for growth, and that's just not going to change. We live in a low-growth world. All the high-growth names exist inside of XLK. So it's an easy way to get involved. Both those are dramatically off their 52-week high. XLC outperformed last week. I think it was down only about 7 or 8% versus the 10, 11.
Right.
Okay, but tech was down a little bit more. So I think you got a 13% down move in the XLK. So it's a nice opportunity to step in there for investors.
So you're saying there's opportunity in both. So is that basically you get into both? Don't just pick one.
Well, look, I think tech you have more upside. I think communications are more of a stable play. If you want to marry them together, that's a nice.
Right, a pair trade.